Mt.Gox pushing into the market again today, and today, of course, we'll take a look at Bitcoin. Also, a handful of other tokens I think that could be affected by this. And is it an all-time high coming this year or not for Bitcoin? We'll break it all down for you. My name is Paul Barrow. Welcome back into Tech Path. I want to thank our sponsor today, and that is Coinbase. If you are brand new to crypto, maybe this is your first time, first of all, welcome into the show. And by the way, like and subscribe. If you're brand new to the show, like and subscribe. But if you have not made your first trade, we'll go over to Coinbase.com. You can do that there. Setting up an account is super easy there. It's super secure. And of course, it is your first place to go if you are looking for the most trusted place when it comes to individuals and businesses. Just jump in over there. Use our link and you're going to $200 in crypto just to get started. That's a great time to go in and maybe buy your first Ethereum, your first Solana token, Avalanche, whatever it is that you guys like, or Bitcoin. All of that's available out there, but use our link down below and get started with it. All right, let's go over to a couple of things. Mt.Gox, of course, is on the move again. 12,000 Bitcoin transferring mean for crypto? Well, some people think it might be a little bit of why we're seeing a little bit of a stagnant position in the marketplace. Late Tuesday night, Mt.Gox, of course, came in again by moving 12,000 Bitcoin worth about 700 million. Not a lot really in the scope of things when you look at just crypto in general, especially Bitcoin. But the transfer follows a similar move last week when BitGo also reportedly moved about 2 billion worth of Bitcoin it received from Mt.Gox to another wallet. So interesting times. There is some speculation that long-awaited repayments to Mt.Gox creditors may be nearing completion. That, of course, would be huge if we can kind of get this behind us. But remember, there's still a lot of scenarios that play out here. Mt.Gox still sends 75 mil to Bitstamp. And after that transfer, Mt.Gox holds around 34,000 Bitcoin, almost 2 billion. So be cautious in the markets right now. This, of course, I don't know that it's going to have a major impact, as even that still is a very small portion. But does it have that sentiment and that psychological effect, I think, on new people coming into the markets? That's the thing that I think a lot of people are still worried about. Goldman says, wait a minute, we've got some things that are changing the macro scenario, and that is the U.S. jobs data. The overstated amount of jobs right now on where weakness is going is a caution for Bitcoin bears. And what they're simply saying is you could be a little too bearish right now. It'll be crucial for global financial markets as well as crypto market. Market observers state that the BLS report was, of course, wrong. So Wednesday, the Fed came in and said they revised the job growth figures, which may reveal job growth from last year through early this year was weaker than previous. So it's interesting that this is done post, because when you look at the kind of situation of how it affects markets, if this was done during a market run, this would have real effect on even the security side of things. So I don't know. Sometimes I wonder if this isn't just manipulated. I know it's manipulated, but to an extent that is pretty broad and wide open. Morgan Stanley also expecting a downward revision of payroll data with a drop of 600,000 jobs. This is the thing I've been concerned about for quite some time. And we will see a jobs report in early September. I don't know that necessarily will change the Fed's position, but remember, all of that's happening this week. All those commissioners are going to start to talk about what we're going to see in September. They're over in Jackson Hole this week. A lot of speakers up there, so follow that. There's a good tracker out there as well that goes through all the speakers and what they're saying and what the potential impact on the markets could be. Most of that time it's on the the traditional markets. Other things to be considering is this right here. The additions revised lower, 818,000 revision. This is the largest since 2009. I just want to remind many of you that maybe weren't around in business or in an investing capacity in 2009. That was right after one of the biggest recessions we had ever had. So it's also one of the biggest bailouts we've also had from the banks. So that was 2008, 2009. That was the hit on the market. U.S. unemployment rate is up now to 4.3%, highest since 2021. If we hit 5% here or get close to it, this will not be good for the U.S. Five out of the last 6 jobs reports now have been revised lower, meaning we have weaker job markets. Overall, record number of Americans now working multiple jobs. U.S. dollar lost 25% of its purchasing power in 4 years. Now, I want you to go back 4 years. It's lost 25% of its purchasing power. Do you think that's going to go increase? Do you think we're going to get more purchasing power in the future? That's why you're paying attention to digital assets. This is not the case on any of the digital assets over the last 4 years. So very, very bad situation right here. 11% of credit card balances in the U.S. now are delinquent. 1 in 10. That's crazy. This is the highest in over a decade. So I don't know that anybody could say this is a soft landing. Many people will say that because what you have, unfortunately, is the 1%ers who are not necessarily seeing any kind of impact. And what I mean by that is they're continuing to buy securities, continuing to buy bonds, continuing to do investments in businesses, etc. All that's really not being hit. It is the middle market right now that is getting the hardest hit, and then also lower income earners. So all this playing into one thing, and that is you guys need to get into a community. One of the best communities out there is ours, and it's the Diamond Circle. We always leave a link down in the description below, but just go over to our website, paulbaronnetwork.com, and you can jump over to memberships and join the Diamond Circle. It's free access, very easy to get involved. It will give you an email. It keeps you caught up on what's happening on crypto, but it also gives you access to additional podcasts and content from me, including different kinds of analysis that we do in the actual member group. So make sure and check it in and use our link down below. All right, let's go over to another things. I want to hit to a couple of clips here. This is a back-to-back on some clips here. This is Tom Lee talking about small caps. Now, why is small caps important? Think of small caps similar to altcoins. Take a look.
I know you're saying that the bottom is in for the market from that early August move. I'm still fixated on your expectations for small caps. I've been talking about them a bit in this hour through the rest of the year. You still think that they could go up 40% by year end?
Yes. John, you know, for small caps to rise 40% means that the PE, the median Russell 2000 stock, goes from 10 times to 14 times. So it's not asking the market to provide some magic and a huge revaluation. It's actually just saying small cap stocks, which have been left for dead largely because the Fed's been tight for almost 2 years, as they start to normalize policy and as mergers pick up, you know, its merger activity has been accelerating this year, and it should really strengthen because it's a sign of CEO confidence. All of these flow through to benefit small cap stocks.
Do you need dramatic cuts for that thesis to pan out? Or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now, you know, 5.5% versus inflation trending towards 2%, and getting rates back down to a neutral rate of 3%. If the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
I kind of agree with Tom there the point he's making at is that it may not take much to kickstart it. Now, granted, he's considering this under the guise of no macro pressure, meaning crazy job issues, more bankruptcies, problems on consumer front, continuing to see problems on retail, because that's going to create downward guidance on retail, which in some cases can affect small caps. So you have to kind of be cautious, and it's a bit of a balancing act in looking at that in comparison. But compare that to altcoins. Altcoins kind of the same scenario. Right now, not a lot of liquidity that's moved into altcoins, which is why we've seen a lot of these that they've either started to stall, reverse, or absolutely just go sideways. And that's everything from Solana to Avalanche, you name it, in the altcoin side of things. And that's still in the top 100 tokens. Once you get out of that, it gets really interesting. Now, he went on to talk about how do you buy or play the bigger market caps in comparison to small caps. Take a look.
How important, not necessarily just to small caps, but to the whole market narrative, will NVIDIA earnings next week be?
Well, NVIDIA is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. But NVIDIA, you know, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell NVIDIA to buy small caps. I think NVIDIA is still a long-term buy.
You know, you have to think at NVIDIA, Meta, many of those would be the two of the plays that I'm looking at, you know, when it looks at securities, just in the sense of very long-term narratives. I'm talking about decade out, 5 years out. And I would agree with him there. I think that's still a potential growth sector. Obviously, AI will continue to be, at least for some time, until we start to see maybe narratives that are, one, it's too expensive, two, we don't have a use case for it and a market fit, or three, no uptake on consumer. Even though I am seeing a lot of growth on paid services with AI, so we'll see if NVIDIA continues to crash or continue to grow with those kind of scenarios. Now, speaking of crashing, the DXY right now, the Dixie has started to fall and it's the lowest level in 2024. This is very bullish. There's the chart right there. Very bullish for crypto. And a couple of things that you have to kind of compare. And if many people will look at this in the sense of just the strength of the dollar in general. You look at the power of what we've seen with inflation, but more is the accumulative inflation and the accelerated inflation that we've seen in the last 2 years. Now, granted, it could slow and we could see just a normalized inflation of, say, 2% and a normalized interest rate of around 3%. Does that give strength back into the dollar? It probably stabilizes it to a certain extent, but I do think that's where liquidity starts to flow into risk. And speaking of risk, you got to think about gold. And I know people won't necessarily always say that gold is a risk, but a couple of points right here. Bitcoin versus gold, real store of value. This, of course, is being kind of lobbed out there. Gold has demonstrated strong characteristics during this market uncertainty, and it has been moving for sure. This is Eric Balchunas, one of the big Bloomberg guys that talks a lot about ETFs, but he's going into the gold trust. It's attracted $2 billion in inflows over the past 6 weeks, staggering 23%. Okay, that's a nice gain. Despite this, gold ETFs are still lagging, though, slightly behind the spot Bitcoin ETF since their launch. So about 500 basis points. So that's pretty significant when you consider that this is a ETF, Bitcoin ETF, that isn't even, 8 months old yet? So let's look at that in comparison. And of course, we'll see how this plays out. A couple of points right here. Mike McGlone says Bitcoin could be leading the reversion of risk assets amid its underwhelming performance since March. And McGlone also predicted that gold could outperform Bitcoin this year with these macroeconomic uncertainties. That will be the big question mark, is which way do you go based on the macroeconomics that we start to see coming in from the Fed and really around the economy itself, because getting out of this push that we've seen on the consumer, on the pricing indexes, obviously around interest rates and inflation, this will be the trigger that either puts you into risk or puts you into long-term assets, maybe like a gold. Of course, I'll put this here just in the sense that it came from Peter Schiff, which I think he might have said this maybe every year for every year. I expect precious metals mining to be the best performing sector, not just for the remainder of this year, but for this decade. Absolutely, I do not agree with that. A couple of points, though, that you have to consider. Here's Peter Brandt. This is a legendary trader, has been one of the most technical traders out there. And the things he looks at is patterns. One of the things that he is hitting on here is the current bull market cycle on Bitcoin will soon become the longest time post-halving in history for a new all-time high, or could indicate that the new all-time high just isn't in the cards. So that's the real question mark, that this was being stated by Peter Brandt. And I think many people would look at it two ways. One is we reached that all-time high way too early in the market cycle. And for whatever reasons, there's a lot of impact from inflation, what we're seeing economically, and then a political, charged election that really is putting a lot of pressure because of the importance of what's going on in crypto. I still believe the narrative and sentiment is the real driver behind all of this. So even though the charts do say something, narrative and sentiment to me is one of the bigger factors. Now, does that mean it's long-term? No, but it does swing parabolic moves. And that's the thing we watch a lot. Speaking of narrative and sentiment, Trump is now back in the lead. There's many reasons why. Finally, at the DNC, we saw policy being talked about for really the first time from the Democratic campaign. A couple of things that Harris, of course, has started to reveal. Odds began declining after she unveiled the economic policy. This, of course, was Biden's tax proposal, which accelerated the decline. We're tracking the election right now in real time. And I think this is the point when you look back here at Polymarket. I think we're going to probably see this start to slide and maybe even more positive for Trump, unless Harris does a pivot. I don't necessarily think that it will be believed, but it could happen. Harris also has endorsed Biden's 2025 capital gains tax. This is the one that's most concerning, which would raise long-term capital gains tax to 44%. This would also mark the highest long-term capital gains since 1922, 100 years ago. Interesting. Plan also has proposed a 25% tax on unrealized capital gains for wealthy individuals. So if you're holding something and you have a net worth that's out there that is extensive, maybe millions or multi-millions, you could own a business, you could own a security. You're going to end up seeing long-term capital gains being hit on this. This is very interesting. All right, let's go to a couple other things I want to hit on. Bitcoin's price could run up into the U.S. election. This is the question mark. Is the election the potential for our historical pattern to be hit? Potential bottom aligns with historical patterns observed in previous states' elections years. This is the question. Bitcoin's third quarter bottoms in 2012, 16, and 20 also were strong upward momentum after, often leading price rallies and, of course, record highs after these elections. Could be the case. The only difference here is in all of those years prior, crypto was never being talked about as much as it is right now by a U.S. presidential candidate, nor by Congress almost every week. So that is the bigger narrative going forward, is how does our organization of a government deal with what's happening with digital assets? That's the real question going forward. That's why you need to be voting pro-crypto no matter what. If you're watching our channel, hopefully that's the reason you're here, is you are most likely a single or a two-issue voter, and crypto is one of the big ones. So go do it. One thing I want to hit on, and that is ETH. And a lot of people kind of saying, well, ETH is lagging. ETH is not moving. It's dying, blah, blah, blah. ETH fears demise are greatly exaggerated by Coinbase. They're saying this is just not going to happen. We think the application-based utility may emerge as the largest demand driver. Many people still look at Ethereum as the next internet. We think that the high throughput, low fees on the L2 environments, we've talked about this at, just watch any of our videos, enable new forms of applications, asset utility, all of that not available on L1s, which we're seeing more and more of. We will continue to see, I think, a lot more growth. It's just the cycle, and it's also, there's so many pressure points that we've talked about. Economy, macro, what we're dealing with in the political landscape, what we're dealing with in the regulatory landscape. All this is merging at the same time. So for the market to be doing as good as it is, in my opinion, is a huge bullish signal. Other things you kind of have to look at is what's happening on Polygon right now. Polygon, of course, layer 2 on ETH, exploding out of the market right now. This is on the daily, and of course, this is the key. We're only a couple of weeks of seeing layer 2 liquidity start to explode, I think, within this ecosystem. So again, this is just more strength within Ethereum as a whole. I'm not sleeping on ETH. I think it's still one of the biggest assets that we need to be watching on an ongoing basis. Remember, diversification, best way to go. All right, breaking here, of course, is the Fed FOMC minutes are in, and a vast majority of the commissioners saw September cut as likely appropriate. So this could be something. Act accordingly. You'll see what happens as we start to roll out. All right, if you guys are not following me on X, make sure and do that. It's very simple. It's just @Paul Barron. And of course, we'll see you next time right here on TechBat.